Good afternoon. My name is Alexander Rosenlew, and I'm presenting Orthex, the Finnish consumer goods company. So a few slides first on who we are and what we are doing. Nordic has been for a long time our home market, and now the horizon has lifted and we're focusing more and more on growth throughout Europe. Today we have sales organizations in all the Nordic countries and then on the biggest markets for us throughout Europe. And we are present with 3 strategic brands: SmartStore for storage, GastroMax for kitchen products, and then Orthex, the company brand mostly known in Finland. If we look at the footprint, today we operate 3 modern factories in the Nordics, and they are highly specialized and automated, and this makes it possible to produce efficiently in our own countries up in the north. And these are clearly all certified, and we are proud to say that about 90% of our products are produced in these facilities. This gives us a bit of an edge in terms of ensuring end-to-end sustainability throughout the whole process, from product development, own production, and then the quality is ensured at the customer, and finally, hopefully the consumer is happy with what they get. We also have a distribution center, a warehouse on the border between France and Germany to serve our customers flexibly, efficiently, and in good quality and time. So looking at what we've become over the years, the mission is very clear. We are there to provide an easier everyday, and if we can do that through practical products that fulfills a need, that solves a problem in the home, then we have come a far way. So always when we look into product development, we're not into the things that are just there, we're into the things that help everyday life. And especially storage solutions is a field where we believe that we can, with a very good and broad portfolio of products, we can help the everyday life and the everyday needs of storage. Kitchen products, our second category, about 20% of sales, is quite a lot about food storage as well. So there's a clear link to the storage category and quite often the same shelf and the same buyers in the stores. And then we have the last category, which includes home and garden products, flower pots, etc. So what is interesting here is in our strategy, we want to achieve about 10% turnover coming from new product, keeping us alive, keeping us current and following the trends. And that, of course, creates quite an important job, which is also cutting the tail. And there you have to be extremely focused not to put your production units into problem and your warehouse is too full. But for us, the long-lasting products, the quality of the products are key of what we are doing. And this is somewhat against the trend of low price, low quality that is prevailing, at least today, when the consumer is more and more careful. So I take the opportunity to discuss the start of the year, and that's actually quite, I hope, interesting for you. Most of the consumer goods have had a bit of a tough time, and that's of course linked to purchasing power, to geographical and macroeconomic challenges, which in themselves makes consumers sit on their money and not spending too much on the products. And this means that there's a tough competition from low price alternatives, but we believe in the end, by being consistent, by building brands, by being the best offering, the best solution to many needs, you can actually overcome these. But it's a long-term game, not a sprint. Then if we look at what we've done, we've been extremely tight on the fixed cost. Of course, since our factories are so far automated, our structures are in place. We have not we have not cut on anything that could prevent future growth, but we have been very, very cautious on where we spend the money. And the money is spent today in the stores on new product to drive future success, future growth. I would say the outcome at the start of the year, always hopeful when a year starts. Looking back, we are a bit disappointed. There are a few quite clear reasons for it. There are many success stories as well, but there are some customers, some collaborations that didn't work as we had hoped for. In the end, we've had a healthy cash flow and we have a strong balance sheet, which actually gives us room to maneuver and find future growth. So looking quickly at sales, we were down a bit, almost 5%, and we would attribute this to negative consumer sentiment and actually a few retailers, especially in Europe, having very hard times paying their bills. So we've been cautious in shipping and that has slowed down the momentum a bit. When you have a lot of cost related to your structures, as soon as the sales are falling, it means that a little bit less flows through, however, posting a positive EBITDA at 1.7 million or 8.2% of turnover. Cash flows strong in the quarter. Then I won't go too much into the geographies and products. This is just a visualization that Nordic is still the biggest. Clearly the ambition we have is that what we call here rest of Europe pillars will one day be, let's say, in an opposite way than they are in this picture. And that's where the focus is. A bit sad that temporarily we had a bit of a hiccup in Q1 due to a few customers and losses related to sales, not credit losses, but carefulness in actually shipping goods to customers that were unsecure payers. And there has been a strong push to compensate for clearly the weak consumer takeoff. Looking at the strategy, which is still highly relevant for us, it's built on three very clear boxes. The number one is to grow in the Nordics, in our home markets. And that's from time to time a bit tough, especially when consumer sentiment is down. That's the place where we then need to focus on bringing new interesting products. And yes, that we are doing. And focusing on the category, focusing on actually helping our retailer partners to be successful in the whole category. And if we can be meaningful to our retailer partners, our long-term partners, they will select us to be there in the shelf. And that's our ambition. And we're, of course, very thankful for all those long cooperations. Then the number two box, which is to me the biggest opportunity, and that's accelerating the growth in Europe. We are already having quite some significant, big, interesting customers. But we are, with many of them, in a phase where we have a quite small assortment, when we are not in all the stores, and where we don't run national campaigns yet. So the ambition is to deepen the cooperation with the customers that we have opened, let's say, during the past 1 to 5 years. And that should give a good leverage on what we are doing. And then we have the online retail channel, where we are present on many platforms and present on many of our traditional customers' online platforms. We're not doing it ourselves. Logistics to consumer is not our best practice. It's not our best asset. So we'll give that to the experts to handle for us. And then there's the looking for a suitable partner in Europe, which we are, I think, doing all the time. And hopefully at some point there's something to tell as well. The ambition here is to be the number one storage brand in Europe and continue as a leader in the houseware segment in the Nordic countries. Just to give you a picture of who our customers are, maybe some familiar brands to you. These are just some examples. There are many more customers we have, but just wanted to show to you that we're operating in basically almost all of the different formats of change throughout Europe and the Nordics, from discounters to e-com to DIY. For us at the moment, the DIY, specialty and grocery are where we have, I would say, the strongest foothold. But we have also some really good cooperations with retailers where our products are well displayed and can be sold as branded goods. So what drives success? I think what we can do for our partners is actually we can know everything about the category. We can know exactly what products should be in the shelf to make shopping easy. We can be the one which is the best in delivering on time with quality and speed. And then bring a lot of new product that brings new growth opportunities for our retailers. So we put a lot of efforts into everything which is behind the product and not necessarily visible to the consumer, but we want to be the expert in the whole business, not just selling products at a cheap price. So when things are as they are, and when you need to cheer the consumer up, then it's a good time to have a party. And actually this year, the classic SmartStore box turns 30 years. I believe we were the first one that had boxes with clips that could close the lid firmly in a qualitative manner. And we are quite proud to say it. Nowadays, this is almost standard in the category. So we have to keep inventing, we have to keep freshening up things, but from time to time it's nice to look back and celebrate what has brought us many years of very good growth up until now, and I'm pretty sure going forward as well. Then always a few words on sustainability. There's a lot on this slide. I think the main building block in our approach to sustainability is that if we can create long-lasting products that you don't need to throw away after a few uses, then you are quite far already. And the target is clearly to reduce the carbon footprint we have. And if we can do that, we actually help, from a helicopter view, we help the climate warming from speeding up. So that's, to us, that's key. And the biggest impact is clearly the raw material we use, and therefore for us it's really important to include recycled or bio-based raw materials in all products where you can do it according to legislation today. And of course, with all the greenwashing going on, we spend a lot of time in actually having third parties to ensure and to show, and that we have the documentation that what we are claiming is actually completely true. And this is important to us because if you say something, you better stand behind it. And that's why we take some pride in actually spending quite a lot of resources to make sure that we can be certified in different ways for our sustainability efforts. On the innovation side, I think there a few words, a lot of new products. During the COVID time, we invested heavily into our production, into our capacity in the factories. We maybe even overdid it, so we have quite a good capacity now to work with. So we have been able to channel quite a lot of our investment into new product, and this is extremely exciting to follow the trends, to see what's needed. Also to sometimes fail and realize that, okay, this was not good. Then you have to be quite quick and just realize, okay, this was not that good. Let's move it aside. Let's focus on something which is better. Having said that, a mold investment is always a very big investment. To make a product, you require a quite big handmade steel mold, which takes time to produce and a lot of money to acquire. But just to give you an idea of what actually we are for our partners, we are not only a supplier, we have a lot more to offer. We have a long experience. We know very well the categories. We have the insight. We do the research. We have the offering. We know how to put it into shelf. We can provide the goods on time, complete, and also quite usually faster than competition coming from the Far East. We work hard on sustainability. We focus on building strong brands that consumers want, and we have a wide range of products to offer, often with award-winning designs. And this is, of course, the story that we want to tell the buyers at the big retailers, and when they get what actually we are doing, collaboration usually becomes quite much more rewarding. Then just a quick jump into the financials for Q1. I said that sales were down a bit. They were down by about 1 million, and when the top line is a bit weak, when you have a very automated and actually quite far fixed cost-based operating model, it will flow through down on the bottom line, and that we've seen in terms of the profit not being exactly where we wanted. Having said this, I strongly believe that the other way is also there, meaning that when we have a bigger growth, we have capacity for it. Actually, we would, or I would personally be surprised if the relative margins wouldn't be better. Then looking at one of the interesting parts in our business, and that's of course the raw material price. That's the biggest cost we have in the products. As we are so automated, actually the salaries are quite a small part of the end product's cost. The raw material had a huge peak some years ago. It went up by almost 70%, came down again. Oil has been going down. But in Europe, the raw material prices have not gone down as much as in other places of the world at the moment. Even though the demand for raw material is quite low due to general carefulness, auto industry in a bit of a challenging situation, etc., etc. So we are hoping and expecting that at least the price wouldn't go upwards. For us, a stable trend is always interesting because that's something to build your assumptions on, but not giving us any major favors during the period. In terms of investment, here are the latest ones. I just wanted to point out the leverage at the moment. The balance sheet is at 1.2 net debt to EBITDA, and that gives us plenty of room to maneuver. And the targets we have still there, still the same. We are in a strategic period now, looking at the targets, looking at perhaps refining them, and we'll come back once that's ready. But for sure, still growth target overall and fast growth outside of the Nordics. So full focus on sales growth, and then of course one day we hope that the consumer sentiment will be a bit more positive, so we can have some wind with us and not only rain in our faces, as today in Helsinki. Thank you very much.
Thank you, Orthex CEO Alexander Rosenlew, for your presentation. Please join me for a Q&A.
Thank you.
So, starting off with growth. You've been with Orthex for quite some time, building the story from a Nordic company into a European player. What do you think are the key insights you've learned along the way?
I would say stay true to what you have and what you do, and be quite consistent. I think the guiding star we had that we are making a quality which is slightly better, and we want to improve the consumers every day. I think that's one of the key things. And then one learning that came quite in the beginning was you can't be best at everything. I mean, choose where you are good and be really good there. That, at least to us, has been one of the recipes.
I can imagine having a high quality and being good at what you do, it's something that works here in the Nordics, but Europe and the rest of the world as well.
I believe so.
How do you teach consumers into appreciating quality in a category like storage where, well, you might be competing with IKEA boxes, for example?
I think it's about trial, and I think a very good way of seeing it is that usually a consumer who has bought one of our boxes, and they're often modular, usually that consumer comes back to our brand if they have used them once. And we can see that especially now that you get all the statistics out from e-com, you can see the conversion rate of a shopper if he or she comes back to buy the same type of product. And I think there we are clearly when we get the product to the end consumer, we are beating competition.
So you have to get that first Trojan horse into the consumer's apartment, and
that's one way of saying it. Yeah.
How do you see your multi-brand strategy? You have multiple brands, although SmartStore is the spearhead for European growth. What do you think are maybe the strengths and maybe some downsides to this approach?
I think looking back at our at some stage in our development when we had acquired 2 Swedish companies, I think we had 9 brands.
Yeah.
And we cut it down to SmartStore, GastroMax, and then Orthex. Orthex is clearly sort of the traditional Finnish household name since 1956, and I believe that any person who is born in Finland and is my age, I don't know about the youngsters, all of them, but many of the people, they would know Orthex by heart. So that's an excellent company name for us. But then it goes well into the home and yard category as well. If you think about SmartStore, it has become a real brand, and it's becoming big enough to actually support the brand with media, with visibility, with influencers. And I think SmartStore translates very good into the storage category. But I think we would have a hard time putting it on, let's say, kitchen utensils like frying spatulas or things like that. So that's why we have the GastroMax brand left in our pockets.
So you could maybe conclude that some of your brands just don't expand into these certain categories you're active in.
We could say so, and especially for SmartStore, it's a certain sort of niche that we want to operate in, and what we did not that long ago was actually we moved the food storage branding from GastroMax into SmartStore.
Yeah.
And that proved to be a quite good move, actually.
Okay.
And it translated good into that.
Yeah.
So it's clearly the spearhead.
So are you seeing consumers buying both SmartStore storage boxes and food storage?
Yeah, absolutely. And then when we talk to retailers about shelf space or campaigns, etc., it's so much easier when you have it all under the same brand.
Yeah. How about thinking about your brands? Do you still see room to expand them further into new categories they're potentially not active in right now?
I think, I mean, they could stretch a bit.
Yeah.
They could stretch, but not too far. Okay. I think there are rooms still where you have kind of storage needs which are not directly boxes, where you could think that SmartStore could be a really good brand.
Okay, so a careful yes.
A careful yes.
How about, well, whenever we host these events, I feel like there's always this question popping up about M&A. And here, the asker would like to know, what kind of companies are you looking for in M&A, and how does the pipeline look like?
Yeah, we are actively looking for a foothold on mainland Europe, and if that foothold includes additional production capacity, if it includes access to new customers, and if it includes, let's say, at least some products that could fit into the quality image that we want to convey, then I think we are close to a good fit. And then if the price is right in the end as well.
Yes, and I could imagine you'd prefer the target being somewhat automated when it comes to their production lines?
It would be good. On the other hand, we could bring in our know-how into a factory which is on a different level today.
Yeah. Piggybacking on that comment about bringing in know-how, how active are you as an acquirer in the sense of integration?
Meaning that how active we are looking, or
how well do you integrate, or how in depth do you integrate a acquisition target into your operations?
Well, I think the previous two acquisitions we made, what we actually did was we turned everything around. We had 3 production-driven companies, not focusing too much on consumers, not focusing too much on brands, and we actually built a whole new way of operating as one company with the same ERP system, with the same way of operating throughout the organization. It takes a long time, but once it's done, you can become stronger.
I can imagine you're able to cut off some costs that are, well, on multiple different companies.
You should be, and then I think if you want to be really good in something, then it's better if the whole organization goes the same direction, and share the same sort of vision for the future.
What do you feel are the main benefits you would get out of being closer to your key clients through M&A?
Yeah, I think still, I mean, we are talking quite bulky goods, and we are talking retailers who have big shops and don't want to keep inventory.
Yeah.
And they would prefer, I mean, fast deliveries, and we would prefer fast and cheap deliveries.
Yeah.
And then clearly, I mean, with the growth, with the additional capacity that we could get are all important things.
Yeah. Here we have a question regarding M&A, but could Orthex be an acquisition target? I think you have to be careful here what you say.
I don't know. I mean, I don't know how to comment on that one. I personally, of course, I love my company and I think it's a great company. Then you never know.
Yeah. How about you've struggled lately with some weakness with your with some retail partners. What are the main causes of this weakness or their current struggles?
Yeah, I would say that there's a bit of a battle going on the retail scene at the moment. You have some discounters doing extremely well throughout Europe, and you have some concepts that somehow have lost attraction for the shopper. And I think those who have lost attraction for the shopper have had quite hard times when overall consumer confidence is low. So the traffics that have been declining sharply lately. And if you are highly leveraged, then you might have a hard time paying your bills. So it's related to this.
Yeah. But I can imagine even with the performance of your partners varies quite a bit, that there's some strong winners currently and some struggling with this.
Yeah, you're right. However, I think these 1 to 2 years have been a bit different from the usual. I think there has been more struggle in different retail chains. We've even seen bankruptcies on the market, but it's some kind of renewal, and I think e-com might be related to this as well, and consumer awareness of pricing and of assortment. And if you don't have what the consumer wants, and the consumer can see that somebody else has it, and today you can see it so much easier, so you will travel the extra mile to get what you want.
Yes, and e-com seems to be an increasingly growing trend still after the, should I say, Corona hangover. So how do you see any differences in profitability from your point of view between brick and mortar and retail and e-commerce partners?
That's a tough question. I would say in the pure e-com, it's a different game than in the, let's say, multi-channel where you have both brick and mortar and e-com. But in the pure e-com, I think you are able to get to good profit margins if you know what you're doing. Yeah. If you know what drives the purchase, if you know how to how to invest wisely. You can also completely destroy your margin if you try to pay your way in the wrong way.
Yeah. So you have to balance between growth and profitability in that sense.
Yeah, and then I think players like Amazon, for example, there are so many ways that you can invest in their marketing programs.
Yeah.
And there are so many parts of the marketing program that is not delivering you anything.
Okay,
so it's a learning and it changes all the time.
Yeah. Some of our viewers have obviously paid close attention to what you said, and quote, you mentioned that there's a strategy process ongoing. Is there going to be a capital markets day in which the company's new strategy is going to be launched?
That's the intention. I believe so. It's time to. I mean, we've been listed now for a few years, and we've followed the strategy. It's clearly working. We are happy with the growth pillars that we have. We know we can grow in Europe.
Yeah.
We know we can accelerate it. But I think it's time to go out and tell a bit more broadly about, for example, the next coming 3 years.
Okay.
So hopefully in H2 we'll have the opportunity to speak a bit more about it.
So there might be the opportunity to refine it a bit around the edges.
Yeah, I think you need to do it. I think you need to be agile because the world is changing fast, and even though you have your ideas and your thoughts on everything that you should do, you should always challenge yourself and ask, I mean, are we doing the right thing now?
Yeah. Well, you mentioned how the world is changing, but if you look at Orthex 5 years out from now, what excites you the most? It goes beyond the upcoming strategy period as well, it seems.
It goes beyond, and therefore, I mean, I can put in only my personal view on it. And looking back, I've been in this position, which of course has changed a lot during the time I've been here. I've been 15 years already, which is quite a long time. So I've seen the company go from, I think, 12 million to closer to 90 today. And if I would take that and look back, okay, we have 5 or 6 doubled the sales. Of course, my ambition is to continue to grow. I think that's fun. It's rewarding. But we have to grow profitably so we can invest into new interesting products. We can invest into new geographies. I think hopefully one day, if it's not me, maybe it's someone else who says that Europe is our home market and now it's time to take the step into, I don't know which continent for real.
Yeah. But first there's a game to finish here in Europe.
There's plenty to do, which is fun.
Thank you, Alexander Rosenlew, for your participation in the Inderes Consumer Goods Night.
Thank you so much, Thomas.